Hi guys, weekly market outlook today on Sunday, the 11th of August. A remarkable day, interesting day as crypto markets this week had skyrocketed again back to higher levels, which is why we wanted to delay our outlook a little bit. Plus, we got an interesting and important potential meeting ahead of us between Putin and Donald Trump. There is not really a big outcome expected. However, this might move markets and causes potentially some further volatility, especially in some of the important commodities sectors. And let's start with potentially that in particular. The Australian dollar is currently rising somewhat, which is a commodity currency. The Aussie has been rising recently. Equities have been pushing to higher levels, and that gives us the potential sentiment that the market might actually move towards higher levels. And that one is also important and interesting, the Australian dollar, as there will be an interest rate decision due in Australia, and that might impact the Australian dollar as well. On Tuesday, we expect that the RBA, the Royal Bank of Australia, will cut rates by 25 basis points towards the 3.6% level. Now, is that going to harm the market? We might say potentially only, as the current moves are, or as the moves are expected. We can see that currently the market motivation here seems to be a bit limited with slight upside motivation. However, the market had bounced off this important support area, and hence obviously upside motivation might continue, and the Australian dollar might actually kind of move somewhat higher. The US dollar is currently weakening, and a weaker dollar might in general actually also help equities. Equity markets could actually kind of rise further, and we have seen that they had actually been rising again, basically as early as the mid of last week. Basically all of last week, the market started to appreciate somewhat further. So there is some room to be expected towards higher levels, as the market currently might show us. Let's observe the S&P 500 index for now. We can observe that this market has been rising towards a technical breakout level. This strong resistance area might actually break. It had been tested, and this is exactly how the market might actually act then. A retracement could be the case if the market breaks the all-time high, which had been created fairly recently again, and then might actually push this market motivation back to higher levels of some sort. Positivity is expected, as said. Looking at the weekly chart, we can observe as well that the S&P 500 is about to kind of break this high point here, which is similarly looking compared to the Nasdaq, whereby the Nasdaq's momentum is already elevated and even pushing beyond those levels, potentially translating towards a further strong risk sentiment, pushing the markets in general to higher levels, causing potentially positivity in the market's momentum. Reason being is that a stronger US dollar would temporarily, quite often at least, harm markets and pushing them maybe slightly lower. In this market, though, what we can observe is that the S&P and the Nasdaq in general would buy and kind of really remain extremely positive, potentially even pushing towards higher levels even further. Back towards the Ukraine situation, the war between Russia, the attacking war from Russia on the Ukraine. We can see that oil prices might actually be impacted based on that alone. However, oil markets have been falling. We were trading this in our trading group, so just to check out our channel, our website, fxstrategies.asia as well, if you're interested to get last minute and day-to-day updates, webinars, and whatnot. We can observe that the market has actually now started to follow the bearish market sentiment. Our situation was the following. Based on the weekly chart, we said there's a technical resistance pattern here. Let's sell the market to the short side, which is what we did, and we are now harvesting the fruit on this one here. Looking kind of quite potentially fruitful to weaken actually further. But what if there is no agreement to be made, which is pretty likely actually, that whatever is going to be decided over and on the Ukraine is not going to kind of give us a ton of positive market sentiment in general, because first of all, the Ukraine is not part of this initial or further talk happening likely in Alaska. But furthermore, obviously, we can see that potentially Putin continues to say, look, if you guys don't give me the current frontline or the territory which we have already kind of and we are occupying, which is what the Ukraine is obviously not gonna kind of give into, this war situation might continue to unfold further, more dying, more people kind of suffering in the end. But oil prices, they could actually cause some positive motivation, as obviously the entire situation might push oil higher towards backup levels and causing the market potentially to rise even further. In this case, right now, what we would focus on is clearly that this resistance area so far and the zones, the attached zones, are our engagement levels here. This is the next support area, and here you go. Even without subscribing, I'll give you fruitful, hopefully, potentially at least, fruitful tips for the next important trading zones. Again, no trading advice here, but the idea, obviously, if the market continues to fall, those are the next levels of potential support in these markets. What else do we have in general? We have quite a few other news on the agenda this coming week. There is not really major news events brewing apart from the central bank decision from the Royal Bank of Australia. However, we get consumer prices in the US. Consumer prices, obviously, when rising, give us quite some important news in regards to the dollar, bringing us to the euro-US dollar currency pair. Rising consumer prices would obviously harm the euro-US dollar currency pair, and then hence, obviously, that might weaken further. Though the markets have not really been reactive pretty much. In my recent talk, the VIP interview with the one and only Dr. Doom, Mark Faber, in Chiang Mai, northern Thailand, he told me as well that governments are just measuring those consumer prices wrongly. They are not really reflective. Frank, look at your recent insurance. Have you extended insurance payments? Yes, I said, and a 15% rise in insurance. Pretty much the same story, which you guys have likely and are likely also experienced. So that said, that's data from the Eurozone basically, but the US data is not much different. Prices are rising. However, these so-called baskets, which are measuring the inflationary price developments, are kind of something which is supporting the government development, but not the real economy, the real mainstream, as we would call it. Back to the actual market. Let's have a look on the euro-US dollar currency pair, because this one has been rising towards kind of quite some high figures. When Trump took office, the market basically turned around to the upside and is potentially actually even moving further to higher levels. As we observe, the next lines in the sand here are the ones which we just marked up here, and previous resistance areas are kind of quite a few at higher levels. Any breakout to the upside here, say slightly at or beyond the 118 area, might kind of push the market higher. Any break of this zone, though, to the downside, might actually push this market back to lower levels, which currently seems a bit unlikely, as the weakness of the dollar resurfaces somewhat, and in this case, more downside momentum might actually occur, depending on how the market motivation currently goes. But the US dollar is currently kind of quite on the weaker side of things, and I'm currently the US dollar, the dollar index, which is actually not really looking so cool. The market had weakened again somewhat further. Dollar index, basically, when rising, indicates the US dollar is gearing up momentum. Dollar index up, euro dollar down, pound US dollar, Aussie US dollar, among others, to the downside, vice versa. Currently the same story, kind of not inverse. Dollar Japanese yen also moving towards lower levels following the dollar index, which is actually part of the Japanese yen of the the US dollar currency index. In this case, it's not really a clearly and sharp looking chart. However, the market is just looking kind of quite interesting here as the levels are concerned. We can use some of the drawings here where we would say, okay, the markets break to higher levels levels basically here is something which seems feasible again, which means the euro dollar might tank actually. And I'm one of the believers as well that we might see temporarily some US dollar strength as well. And that might actually come at some point soon, just with the start of the release of these data points. And those are clearly the data points we have here. Consumer prices are obviously one of these. Furthermore, later in the week, we have, if I'm not wrong, yes, producer prices as well. Let's ignore them slightly, but obviously both of them might move markets sharply. Producer prices today would turn and would become consumer prices later in the couple of following months or weeks at least. And the situation currently kind of seems to be kind of quite interesting. What else is brewing this coming week? Well, there's not too much further news, but we saw and we continue to see basically what the crypto space is doing. And we saw that the upside momentum in the crypto markets has been ongoing. Led by the one and only Bitcoin, basically, markets have started and resumed further upside. Bitcoin is currently trading at around the 118,000 handle, so it's still kind of moving slightly higher as we speak, basically 118,600. However, looking at the altcoins, they seem to perform even better. The Ethereum market had broken the upside, and that was just a bit of a surprise here. However, we loaded the boat, as we said earlier on, capitalized on Ethereum, one of the markets where we continue to remain in long positions, looking good. The breakout here, the technical resistance pattern seems to break right now. Obviously, kind of the story remains the same as quite often. The market could actually also start to break first back towards this breakout zone and then acting here as a support area to then push the market towards the all-time high, if not even experts, whoever they are, kind of claim that 7,000-8,000, if not beyond, might be levels being tested. In any case, the Ethereum market looking as at the moment, to me, the hottest. It's kind of quite nicely behaving, and with the upside currently, also other altcoins follow suit. XRP is kind of starting to appreciate further, might even move more to higher levels. Solana is starting to appreciate at around the 50 moving average zone as well, looking positively behaving here. Dogecoin, let's not talk too much about that one here. However, Cardano is also starting to appreciate further. So in general, we see altcoin season might have just started and pushing market in general even further to the upside. I wouldn't wonder at least if these markets will give us quite a bit of a rocking show even further. Last but not least, precious metals are also worth a shot, in particular in regards to geopolitical tensions and the war in the Ukraine. We see that silver prices are kind of quite high in demand. Technically, the market looks set to weaken somewhat. However, what needs to happen at first is that the market breaks this low point here before we see potentially any further weakness. The threatening point is that the market kind of continues basically to the upside without stopping, as this beautiful pin bar candlestick pattern usually shows quite often that the market might turn. However, it's advisable in this case that a sell trade only could and should be, as per the textbook, taken if the lows are being pushed, which is this area here. A break of that zone here might then ignite further the downside momentum and basically causing this market to weaken further. The gold price looks kind of better as well, based on the charting patterns on the weekly basis here. The market looked kind of quite weaker last week. I said, look, this market might tank even further. However, at last resort, it seems that upside potential had been accumulated again, but that also might be just in general in regards to the dollar weakness, right? So the dollar weakness causing these markets and all assets to kind of basically get inflated even further. And we are not at the end of the month. We are still in early trading days here. So that's clearly why we still see room in this case to the upside before maybe the market might start to get setbacks, weakening, moving back to lower price levels as the general market sentiment currently suggests. Guys, that's my outlook so far. So still long in crypto. So the stock markets might actually move further to the upside, in particular as the US dollar's weakness is going to continue. That's at least what we have on the cards here right now. Wish you happy trading. Talk to you soon and update you early next week with also promised a fresh haircut, which is clearly due. See you then, guys. Take care. Have a good start of the week. See you then. Ciao.